Today we're going to talk about the panic in the market with some current examples. Recently, Bitcoin dropped 10% from its all-time high of $100,000 in just a few days. The fall was also creeping in, and I received a number of messages and quite a few comments with questions about what to do and what will happen next. People were afraid of further declines during this period. People bought in, some at the highs, some a bit earlier, and now they're in profit but don't know when to take it. In their panic, they're making some moves, taking actions. Some are asking me questions while others aren't asking anything, just sitting there, worried, keeping quiet. Some went to the market, locked in their losses, or exited profitable positions when there was still potential for movement. Some people ask me questions, some don't ask anything. Just sit, worry, and keep quiet. Someone went to the market, fixed a loss, or exited positive positions. There was still potential for movement. Discuss avoiding panic and closing positions. Bullish market examples differ from bear markets, which need different strategies. And since I'll be showing all of this with current examples, and the current market is quite bullish with relatively small pullbacks, the examples and tips I'll provide in this video won't be very relevant for a bear market where there's a deep, prolonged decline. For that situation, I think I'll record a separate video because emotions will be different, the numbers for your positions will be different, and you'll need to act differently. In a bull market, you generally want to go long, while in a bear market, you would short, and the actions you take in these markets will differ. For this case, I think I will record a separate video because here, of course, the emotions will be different. The figures for your positions will be different and you need to act differently. Basically, in a bull market, you should be going long, while in a bear market, you would short, and the actions taken in these markets will differ. So let's talk about bull markets because that's what's most relevant right now. Check the description. There will be a link to register on the Bybit exchange. This is the #1 exchange that I personally trade on, and it's the top one in terms of trading volume, liquidity, and it has the lowest fees. Just from this, you'll save around a few $100s every month. And why do I recommend registering specifically through my referral link in the description? You'll get a cash bonus for registering ranging from $10,000 to $30,000 depending on the size of your deposit. Most of my subscribers get $100, but if you don't have any deposit at all, you'll at least get $10. If you're a big trader, the good deposit, you'll get up to $30,000, but for larger amounts, you'll need to reach a corresponding trading volume. So on this page, click here and you can see what bonus you'll get for registering. The link is below. Enjoy watching. So I'm in the market. Everyone who wrote to me asking what's happening here, I told them to stay in the market. This is not a reversal. Let's start with how I determine whether it's a reversal or not. First of all, we're talking about the cryptocurrency market, only the cryptocurrency market. If you're trading Forex or sitting on stocks, my advice might be somewhat relevant, but probably not too much, because each market has its own movement characteristics. So the cryptocurrency market works like this. Aren't vertical spikes followed by a vertical drop in price? At least I don't remember anything like that. Of course, I can open up a number of coins right now, especially some cap coins like a meme coin that have shot up vertically and then dropped back down. But my words don't apply to that. Stable coins involve trading, not gambling. They don't spike, or normal coins, not low cap or meme coins, don't move like that. The vertical spike hitting some all-time high, followed by a vertical drop like this. And if there are any flash crashes from the highs, it's usually because people have taken on a lot of positions with high leverage, and there are a lot of people in long positions. With minimal movements, everyone starts getting liquidated, and a cascade, of liquidations happens, which drives the price down. After that, the price usually comes back, if not all the way, then at least somewhere back up. And if you're sitting without leverage, even if such a movement happens, you need to ride it out and close your position if you think this is the end of the trend, already on the pullback back up here. Often, this pullback happens very close to the levels from where it started. So even in the case of such a movement, we just sit and wait for the moment to close, at least here. This is assuming that the trend is really changing, but it changes like this vertically, which is theoretically possible. It has happened a couple of times, I think, but overall, it's still rare. In crypto, the trend in crypto often changes through certain patterns, through certain setups. So, for example, it shot up vertically, and if this is the end of the trend, there will be some kind of consolidation here, maybe an ascending wedge is forming or something like that. There will be some kind of pattern, it doesn't really matter. But in the end, there should be a squeeze to the level, a breakout of that level, and then a move out of the trend. Exit from the trend line. So some time has to pass. So it drops vertically like this. That doesn't happen, that doesn't occur. So there's no need to worry here. Naturally, I can calm down those who are trading on the spot without leverage a bit. It's clear that if you're sitting here with a 50x leverage, you could end up in that category of people who get liquidated during a flash crash, during a cascade of liquidations. But in that case, you should act according to your trading plan, meaning you need to adjust your stop losses. Take your profits, don't overstay. So if you're in with high leverage, there's no need to be greedy, waiting for some big spikes. Take your profits. Those who are on the spot will be waiting for big spikes. And in that case, you don't need to panic. Just stick to your plan. And based on that, you should have a plan. So ideally, you should have a plan even when you're on the spot if you're holding positions. But theoretically, you can wait out certain moments and exit right at the trend change. If you're in with leverage and the market pulls back, there's no need to panic. Just stick to your plan. If you're trading with leverage and you don't have any plan, and on top of that, your leverage is high, going to lose money in trading, what should you do? Now, if you haven't lost them yet, but you've caught yourself thinking that you have no plan and you're trading with leverage, especially with high leverage, you should have a plan. What does it look like? Well, ideally, you should have a trading system and a trade journal. Some statistics on your trades. If you have no experience at all, you trade, well, more or less at random, based on some signals, start working in this direction and develop some kind of strategy. Maybe you should temporarily give up on leverage and stick to spot trading, especially since an altcoin surge is about to start and Bitcoin is likely to continue its rise. Even with relatively small balances, you can still make money on spot. So let's sum up the points that I made. You should have a trading plan. Even if a pullback turns into a drop, it usually rebounds, giving you a chance to exit at comfortable prices. There aren't situations in this market where a pullback from a high just turns into a vertical drop with a trend change. And even if something like that happens, it usually comes back and gives you a chance to exit at comfortable prices. Most likely even at prices close to where that pullback started. And even if something like that happens, it usually comes back and gives you a chance to exit at comfortable prices. Most likely even at prices close to where that pullback started. Let me show you with some relevant recent examples from the highs. If you're panicking right here, this is our local high and a pullback is starting. And you're in a position, you didn't take your profit, and you had a profit right here, I don't know, maybe $100,000 for example, and your profit starts to shrink. And there it goes. The market dropped by 17%. The question is, where did you enter? Sure, but maybe you entered a bit late, not here, but somewhere else, like right here, for example. And then you had $100,000 and bam, 50% of your profit gets wiped out, right? You're panicking, just sitting there. You didn't close here? You didn't close there? Nowhere. What are you doing? You understand that you're in a trend, even with such a small jump, you're still in the trend. You just entered late, that's why most of your profit got eaten up. So, has the trend changed? No, it hasn't changed. Yeah, like this, if you draw it by the impulse, it looks like the trend has changed, but if you're trading on spot with larger time frames, you shouldn't chase impulses. You need to stay in the trends. The trend is drawn along the lows, and even if you end up in the red here, if the price drops, it's still within the trend. And yes, you can wait it out, you just entered late. And you shouldn't panic here. You need to understand that when you enter a trade, you can theoretically end up in the red. Yeah, right here the P&L was high and curves are starting to fray because a big chunk of it has shrunk, but it's not a big deal. No, this rating you have can be $100,000, and then in a couple of days it can drop to $20,000. Because 80,000 just vanished into thin air, and then a couple of days later, $250,000. This is crypto. That's how it works, especially if you're trading with keys, and you need to accept that. Maybe you shouldn't enter with large balances if you're not ready for it. The most important thing is not to make any serious trading decisions when you're feeling this emotional. So, what's your task? Wait it out, and there are your 100,000. Profit has shrunk. You'll get a chance to exit. We entered here. You had $100,000, then over $40,000 in profit, then $75. It's no longer 40. Where you had $40,000 in profit, now it's $75,000 at the entry point. You waited for a comfortable entry point even if the trend changed. If this is the trend and it changed, so what? You just waited it out, waited for a comfortable entry point, even if the trend changed like it looks like it did, so what? Here it is with a vertical pullback with a vertical drop, and here's the vertical rise back up. And yes, in this example, it didn't reach the maximums, but you got back most of your profit, and here you can comfortably close your position. But here you need to approach it with a cool head, analyze whether the trend has changed, if I'm still in the trend, and so on. This is already about your work with your state, with your emotions. Well, maybe you didn't close here, you waited, and realized that yes, the trend is changing, and damn, I'm back to having $40,000 in profit, not 100, not 70, and not 80, but you waited it out, and now you're close to 100,000 in profit again. You see that there's some level here? The price is hitting it. Here it is. It's dropping somewhere, and the potential Or a trend change is really present here if it keeps moving down like this. Already at 100 plus, you can pull it up here and you're not even risking going into the red. In the worst case, you'll take your 40,000 back, and that already looks like a plan. You understand that you're sticking to some kind of plan, and you won't end up in the negative at all. Yeah, if I have a profit of 100,000 right now, and I only lock in 40, it might seem bad. Actually, it's good. It's still a profit of $40,000. You just entered late. If you had entered earlier, well, maybe next time you'll enter earlier and draw some conclusions. Well, this is the right way to follow a plan, the right way to stick to a strategy. However, here we see that even some kind of maximum has formed. They even gave you a high. You could have closed at the highs. And here it really looks like a trend change. And you close your position, for example, here, without any emotions, without fear of the drop. You waited for some kind of range to form, some consolidation, maybe even a trend change, adjusted your stop losses a bit, followed your plan, and there's nothing wrong with that. Even if you close at break even, the main thing is not to go into the red, and it's not a big deal at all. Just take your 40,000 profit, that's it. It's not a big deal to take 80,000 plus, yes. Maybe at the maximum there was a peak of 100,000 somewhere, but you will never close at the maximum, under any circumstances. Even if you close at a high here, a new high will form, and then you'll have different emotions like, damn, I didn't take it all, with fear of missing out and so on. I made a separate video about this, you can check it out on the channel. But basically, there's nothing to worry about, and yes, this is a good example of what I just talked about, what I just explained. It's a slightly different situation, let's break it down. Here we had a flash crash, a cascade of liquidations, when Bitcoin dropped by 30% in just a few days, and there wasn't even a peak. It was just moving sideways. You needed to follow exactly the same rules that I just listed at the beginning of the video to wait out this moment, and if you want to exit, to do so during the pullback. So, when the price drops vertically, it usually comes back, if not to the same levels, then somewhere close to them, and it has returned. And you have the opportunity, you've waited a week or two, you have the chance to exit right here. Yeah, if you had high leverage, you got liquidated, but with high leverage, you should have been adjusting your stop losses and so on. Manage your risk. Avoid panic selling Bitcoin at 48,000 after it was 70, losing 50%. If selling, exit at 64, near max. After liquidations, price recovers. No, if you really want to sell, this is a good moment to exit at around 64, close to the maximum. After the cascade of liquidations, the price comes back. And by the way, yeah, it went down. Again, it fell once more. And here it really gets scary because you might have made some mistakes. Maybe you didn't exit in time. Yeah, at the moment when you've made mistakes, you have to accept the loss. And maybe when there's a repeat of that drop, you really need to close your position somewhere, or at least move your stop loss up significantly. This is a bad example because of course it grew a lot. After that, yes, but here, for example, if you were sitting at a high or somewhere around here and panicked during this drop, that's something you really need to keep an eye on and stay alert. And probably, yeah, if you had entered here, holding on until this point, it would have been a mistake because after the XCAD liquidation, you would likely need to close in profit somewhere in this zone. That's a bit of a different story. So, of course, each case and each emotion will be unique. And it needs to be analyzed. Well, ideally, of course, each case is unique. Well, those are the general rules. Stick to your strategy. Don't make any decisions right now just because the price has dropped, but wait for a while. For them, it's universal, but layered with local factors like emotions, balance, situation, and risk tolerance. Each person is unique with different risk tolerances. For instance, a young person might lose $100,000 in trading without severe consequences, while a 52-year-old with a large family has a different risk profile. It's clear that every person is absolutely unique and has different risk tolerances. For example, if I'm a young guy, just chilling and enjoying life, I could lose $100,000 in trading and nothing too terrible would happen. But if you're, say, 52 years old, and you have a big family to support, like 15 people, then of course you have completely different risk profiles. Well, of course you have completely different risk profiles. You need to approach trading a bit differently from the start, right? So if I say, well, go ahead and invest in Dogecoin. Well, I would never say something like that on my channel, but let's say some other blogger tells you that Dogecoin is going to the moon, jump in. You're really 52 years old, and 15 people depend on you. Well, of course you don't need to listen to things like that. We need to approach this issue a bit differently from the start. But getting back to our current market situation, there's no need to panic if it suddenly drops here. In the worst case, if there's a trend change and there's potential for a significant drop, and you're, say, following me and watching this video, well, I'll tell you where to take your profits. If you were following me, I told you where to enter, and if you hadn't traded anything here, you could have jumped in right here with me. Right now, there's no need to panic. Panic isn't helpful. You'll all see the trend change. It will happen again after some flat consolidation at the level, or through some pattern, like an ascending wedge, for example. And that's where you could close your position, or maybe through some kind of trading range in another form, something like that, and it will start to round off with lower highs. In any case, it will be noticeable. It won't happen all at once. And if there is a flash crash, it will bounce back and give you an exit point if you want to get out. But most likely it will continue to rise even after that. Put the panic aside, let's create our trading plan, our trading strategy, and don't make decisions in the moment just because the price has dropped significantly. Because this always leads to either a lot of missed profits or bigger losses in the cryptocurrency market. If you ignore this, then the question is basically off the table. Just one more thing, I'll remind you for the third time, only if you're on spot trading, because if you're using high leverage, you could get caught in that liquidation cascade. But you really need to focus more on sticking to your plan, how to cut losses, how to move your stop loss, and so on. If you have that plan, then just leave it. That's it. This is a universal formula, and on top of it, you layer your specific risk preferences, your own emotional tendencies. You know yourself. Are you an emotional person? You have some kind of gambling addiction or a tendency towards that, or not? Depending on that, the advice will vary. First of all, these tips will differ based on the position size and leverage. Some people absolutely shouldn't use leverage. They should only trade spot, especially if you have a certain balance size. A lot also depends on the size of your balance. Yeah, if you have a large balance and it's really important to you, you might be earning that money at work for, I don't know, maybe a year. Well, accordingly, there will also be different levels of leverage. You shouldn't use it. There's no need to get into blocks and coins, and you shouldn't trade meme coins. It's all piling up now. Well, I'm listing some universal rules. And if you want me to analyze some other specific case, just write about it in the comments or message me directly. You can find my personal messages in my Telegram channel. And by the way, if you don't know how to trade in the market, you don't know how to create a trading system there. And in general, what principles or rules should you trade by? I'm telling you, follow your own rules. But how can they follow them if there are no rules? The very first step to forming them is to subscribe to my Telegram channel. And in the pinned message in my Telegram channel, I have a free mini course on trading. Go through it. Just get on the right path and you won't panic during drawdowns. Thank you for watching. Subscribe to this channel. Good luck. See you